Hey everybody, Chuck Barone. It is Monday, December the 18th, 2023. We're off and running another week of crazy, rounding out this last week until ho, Santa comes. We've had quite a Santa rally this year. The market's going crazy in December, thanks to our Fed buddies. And quite a bit this week coming up. It's going to be an interesting week. I think we have quite a bit of data coming. Hopefully, it won't be such a crazy wild week and we can get a little bit of peace before we have our time off and relax with our families for Christmas. But anyway, before I get rolling on today's show, let me just take a second. Welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys sticking around, watching these videos, hitting me up with comments and questions. You guys rule. We appreciate you. All right, so let's look at these markets today. Markets up again. The market's really happy, feeling like the cycle is over. Now it's time to start cutting rates, pricing in several rate cuts for next year. You can see by these bond yields where the market believes rates are going. As a result, the stock market's been flying up again today. A new record for the Dow Jones closing today, 37,306, up less than a point, up less than 1 point. But it had a record close on Friday. Therefore, if it was up even one millionth of a point, it was going to be a new record today. Here we are, new record close for the Dow. The NASDAQ gains 90 today, a nice rally in the NASDAQ, sitting at 14,904, closing in now on 15,000 on the NASDAQ. And the S&P 500 up 21 points today. This is the broader market, now sitting 4,470, a nice number for the S&P. So stocks looking pretty strong, big numbers now. I mean, it's really kind of crazy because, you would figure with rate cuts coming, the biggest moves in the stock market are yet to come, but that may not actually be the case. This might be a case of anticipation being greater than realization here. I think with the markets pricing all of these cuts already in, how much gain is there going to be when they actually happen? Well, we'll find out, but it seems like a lot of the gains are already priced in. So now if you're buying now, you have a little more risk where if any of these numbers disappoint, the market corrects. So you have a little more risk that way and probably a little less reward possibility because the market's already pricing in the cuts that are supposedly coming, right? So anyway, stocks at record territory. The bond market today, well, bond market pretty quiet today for a change, a nice day. The 10-year now 3.95%, up 2 basis points today to still this was just threatening 5% less than 30 days ago. The 2-year, 4.45%, basically unchanged today, up, basis points. But less than basis points, hundredths of basis points. So, the markets today, quiet. We'll see what happens and how they react to the data coming later this week. But it looks like bond markets still the bias seems to be, even though the markets today, not much movement, bias tends to be rates or yields down. The dollar, like the bond market today, down very small, sitting at 102.53 on the index. This was just 104 just a very, very short time ago, guys. So now we're, the dollar drifting back down toward the Mendoza line at 100. We'll see how long it takes to get down there. Gold today up. Metals with the dollar down a little bit, metals rally. You have gold up $7.60, $2,027.08 for an ounce of gold. Silver falling 4 cents today, $23.80 for an ounce of silver. Still good, strong numbers for precious metals. And as the dollar continues to come down, you're going to see those precious metal prices continue to go up. Oil today, up small, up $1.20 per barrel. Still right in the range we expect it to be in. $72.63 for a barrel of West Texas Intermediate. We kind of expect it to stay in that trough between 70 and 75 per barrel. And it looks like it's comfortable there. So we'll see. The breakouts that have happened have been very short-lived, typically media-driven, OPEC cutting production or whatever it is, the market's responding, but only for a very short time and then falling right back to where it's comfortable. Bitcoin today rallies up $499, 42,420 for a Bitcoin today. Still a good strong number for Bitcoin. A huge rally, still in progress, consolidating, has not broken back down under 40,000, which would be where I would expect bottom line support to be at. So Bitcoin looking solid, guys. All right, like we do every Monday, let's talk about what we can expect this week, the news and the data we're going to be getting that could drive markets and change some stuff around in your portfolios. Today, Monday, quiet day, no real data coming today. Earnings will start trickling in actually now that the bells, we've closed the markets for the day. Tomorrow, we'll get a little bit of real estate news. We'll get building permits, which are expected to be up. Housing starts expected to be up. Real estate, the new housing market in real estate still moving. Since there's very little on the market in existing housing, buyers being driven toward new houses, new builds, and builders offering incentives like rate buy downs and stuff to help buyers get started. So that's why new housing is actually in a pretty strong market right now. On Wednesday, we'll get existing home sales. Now, there's where the market's really having its struggles. Existing home sales expected to be down. We'll get the Mortgage Bankers Index, which will show mortgage activity expected to be up. I'm surprised to see that because my mortgage activity hasn't been. And also on Wednesday, we'll get consumer confidence numbers. That's going to be the first big one of the week, I believe, the first real market mover. Consumer confidence expected to be up. We'll see by how much, if it is up, and is it enough to actually move the markets in any way, shape, or form. On Thursday, we'll get our GDP numbers, final numbers for third quarter, expected to be 5.2% growth for GDP. We'll also get jobless claims for the week, expected to come in at 213K. That's up from 202,000 last week, which was well below their estimate of 220. We'll also get leading economic indicators, which are expected to be down. And we'll also get the Philly Fed survey, which is also expected to be down. That has a lot of data involved. It's supposed to be a negative report, down, but not as negative as last month. So we'll see what that means exactly. And then on Friday to close out the week, it's going to be a short day in the bond market. Everybody getting ready for their ho-ho-hoing. We'll get personal spending info expected to be up. Personal income expected to be up. Durable goods orders. This is good for manufacturing. Also expected to be up. And the University of Michigan Consumer Survey expected to be up as well. So that would be nice. If all of this comes in the way they're guessing it's going to, should be a pretty strong week for stocks. Now, don't get me wrong, some of these numbers have a possibility of being disappointing to these markets. I'm looking at consumer confidence, personal spending and income. Durable goods orders will tell us a lot about manufacturing. We'll see what the Philly Fed survey says. It's going to be an interesting week, but it looks like the bias would be toward a pretty good week for stocks. Interesting data we need to talk about before we sign off today. Have you seen the chorus of these Fed numbnuts on and out, all coming out now? The parade of yo-yos downplaying rate cuts coming. So you got Cleveland boss Mester, whatever. She said that, quote unquote, markets got a little ahead of the Fed down as far as rate cuts go. You got Chicago President Austin Goolsbee said he was confused by the market reaction to the Fed decision to just leave rates unchanged, as if Powell's comments didn't happen at all, and all they did was leave rates unchanged with no message there, right? You got last Friday, New York Fed Chair Williams said that the Fed is not really considering, or the Fed isn't really thinking about when to cut rates. At the same time, you got the Atlanta Fed Chair talking about rate cuts coming. The bottom line is I think that these Fed the more conservative Fed governors don't want the markets to get too excited, to get too giddy, to get too far out over their skis on rate cuts, because these guys are aware this inflation fight could change. It could go back the other way with all the factors out there, okay? And the geopolitics at play, an election year, and all the other variables that could affect things. They don't want the markets pricing in these rate cuts where if they don't get their way and the Fed has to make change in their plan or their stance, the markets don't spaz out and have a big correction, which is exactly the opposite of what the Fed wants. So I think these guys out there, just to try to calm the markets down, take some of the steam out of this rally that's been happening since Powell's comments last week. Last thing I saw today, this made me laugh, guys. Are you seeing that? Have you guys seen this? The state of Tennessee, their attorney general, very conservative state, obviously, suing BlackRock, saying they were misled over BlackRock's investment policies. They said they were misled on the extent of the consideration BlackRock makes toward the environment on their investment policies. Apparently they feel that considering environmental damage when you make your investments is bad for business. Now you've had and I guess this is the natural outcropping of this. P.S. BlackRock said they will vigorously defend. But what's happened is now you have the Democrats trying to force businesses to do this equity, diversity, and whatever the hell their crap is. So now, of course, the Republicans have to come back with their stuff. Now theirs is, I forget the word, but anyway, they're going to go the other way about it. Now you're going to have politics and businesses, politicians trying to tell businesses how to do their business. This is just not going to end well, politics and business together. Once politicians can dictate to businesses how they run their business, now they already can write the rules. I'm not talking about that. I'm talking about investment policy. I'm talking about expansion policy. Where does that end? It ends in tears is where it ends. These government guys, theoreticians, okay, they're not suitable to run the economy. They're not suitable to run giant businesses like BlackRock. What's their experience doing that? But they're going to try. So anyway, and it's of course going to be the tug of war between the two parties who want to make everything political now. Every single thing there is. It's just horrifying, guys. Let's focus on having, good policy. Forget the politics of it all, man. Can you guys just put down the sword for a second and come up with something good for the people? Well, I don't know if that's what politics is all about anymore. Anyway, guys, it's going to be a short show today. I appreciate your guys' support. I apologize for last week. Had a little sickness. Missed a few days, but we'll be here hopefully every day this week, rocking and rolling. And until tomorrow, we'll bring you the news you need. Till then, guys, take care. Thanks.